Never buy these type of houses in the San Francisco Bay Area. The house you think is your dream property in the Bay Area might actually be the worst financial decision you make in 2026. I'm not talking about overpaying. I'm talking about buying the wrong type of house entirely. Every week, I meet relocators and first-time buyers who fall in love with a Victorian in San Francisco, a hillside view home in the Oakland area, or a fix-upper in the Berkeley because it looks incredible on Zillow, and then the reality hits. The foundation costs $200,000 to fix. The commute they thought that would be manageable destroys their quality of life. Or the neighborhood they bought into is changing in a way that tanks their resale value. The wrong house type in this market isn't just inconvenience, it's a financial trap that can cost you hundreds and thousands of dollars and years of stress. So this isn't a list of bad houses. There are house types you should avoid unless you fully understand what you are getting into and you're prepared for the trade-offs most people don't see coming. Let's get into the type of houses that look perfect until you actually own them. Hey, I'm Decent Kai, and I help people buy, sell, and relocate across the San Francisco Bay Area. If this is your first time here, I'll make a video break down the real trade-offs in this market so you can make a smarter decision with your money and your life. Today, I'm walking you through the specific house types that caught buyers off guard in 2026. These aren't theoretical warnings. These are patterns I see every single week. If this sounds helpful, hit the like button and subscribe so you don't miss the next one. All right, let's dive into it. When curb appeal become a money pit, San Francisco Victorians are iconic. They are what people imagine when they think about living in the Bay Area. The painted ladies, the bay windows, the ornate details, they are stunning. But here's what relocators and first-time buyers don't realize. A huge percent of these homes have serious foundational problems, and fixing them isn't a $20,000 project. According to the Foundation Repair Network, septic retrofitting and foundation work in San Francisco can easily run from $150,000 to $300,000 depending on the scope. Here's a mismatch. Buyers fall in love with the exterior. They imagine hosting dinner parties in these beautiful rooms, but they don't ask the hard question during inspection. They don't budget for the reality that many of these homes were built in the late 1800s and early 1900s, on fill, on shifting soil. And here's the worst part. When you go to sell, buyers know to look for foundation issues now. If you haven't fixed it, your pool of buyers shrinks dramatically. If you have fixed it, you really get dollar for dollar return on that investment. The curb appeal premium you pay when you buy often evaporates when reality sets in. Before you make the offer on the Victorian, get a structural engineer to evaluate it separately from the standard home inspection. It will cost you $500 to $1,000, but it could save you $200,000 in surprises. Thinking about relocating to the San Francisco Bay Area? Well, I got just a thing for you. My team and I have actually taken the time to create the ultimate relocation guide, which is meant to save you hours of research, and I've linked it down below. From top employers, the best hospitals, and a boatload of other things that you will need to know before making the move, the best part about this guide is 100% free. That's right, you heard me right, 100% free. Just click the link in the description with the top pinned comment. Hope that helps. The view costs more than the mortgage. Oakland, Berkeley, Sausalito, Mill Valley, the hillside, home with sweeping views of the bay are some of the most desirable properties in the region. I get it. Wake up to these views is incredible. But here's what buyers miss. Hillside properties come with geological risk, and most people don't price in until it's too late. According to the USGS, the California Geographical Survey, large portion of the Bay Area sit on landslide-prone terrain, especially area with steep slopes and certain soil types. When the next big rain cycle hits, when we get seismic activity, hillside homes can experience anything from a minor shifting to catastrophic slope failure. And here's a financial trap. Insuring these properties is getting harder and more expensive. Some carriers won't touch them. Others require expensive landslide coverage on top of the standard homeowner insurance. And if your home does experience movement, repair, can run into the six figures easily. The resale challenge is real too. Buyers are getting smarter about geological risk. If your home has any history of movement, settling, or drainage issues, you are going to face serious problems when you try to sell. The dream view you paid a premium for might just limit your buyer pool instead of expanding it. If you're serious about a hillside property, hire a geotechnical engineer before you close. Get a soil stability report, understand the drainage systems, know what you're buying into before you sign. When renovation dreams meets reality, the Bay Area has some of the most beautiful older housing stocks in the country. Craftsman, bungalows, Spanish revivals, mid-century gems, and for buyers with vision, a fix-upper can seem like a perfect way to get into a desirable neighborhood at a lower price point. But here is the reality. Renovating in cities like San Francisco, Berkeley, and Oakland, and the peninsula is not like renovating in other parts of the country. The permitting process is slow, expensive, and often unpredictable. According to the San Francisco Planning Department, even relatively straightforward projects can take up to 6 months to a year just to get the permits approved. That's even construction even started. If you're doing anything such as exterior, add square footage, or changes the footprint, you're looking at neighborhood review, historical preservation approval in some districts, and layers of government approvals that add tens of thousands of dollars in soft cost before you even break ground. Here is a financial trap. Buyers underestimate both the timeline and the total cost. They budget for construction, but they didn't budget for holding costs during delays, permitting fees, architecture and engineering fees, and the reality of contractor bids in the Bay Area is significantly higher than other markets. What looked like a $150,000 renovation quickly becomes a $300,000. And the timeline you thought that was 6 months stretches into the 8 month or longer. If you're considering a fixer, talk to at least 2 contractors and 1 architect before you make any offer. Get rough estimations. Understand the permitting requirement for your specific project. Fill in buffer timing and budget that feels uncomfortable. That's actually realistic. Alright, we covered Victorians with foundational issues, hillside homes with geological risk, and fix-uppers that trap you in the permitting hell. And if you started to realize there are way more landmines in the Bay Area housing market than you thought, you are not wrong. But here's the thing. The right house type is in the right neighborhood can actually set you up beautifully. You just need to know what you're looking for and what to avoid based on your actual situation. Before we get into the next 3 house types you should avoid, I want to give you something that will save you months of confusion and costly mistakes. I created a free San Francisco relocation guide that breaks down neighborhoods, climate, and other relevant details for buyers in today's market. If you want to feel confident about where you're moving and what you're buying in 2026, grab it below. It's the exact guide I use with relocation clients, and it will give you clarity you can get from Zillow or Redfin. Alright, let's keep going. When HOA fees are just the beginning, condos makes a lot of sense for first-time buyers and relocators in the Bay Area. Lower entry prices, less maintenance, responsibilities, walkable urban locations, on paper, is a great option. But here's a trap. Not all condo buildings are created equal, and deferred maintenance is one of the most expensive surprises you can face as a condo owner. According to the National Associations of Realtors, deferred maintenance happens when HOAs delay necessary repairs to avoid rising fees or delaying special assessments. This is incredibly common in older buildings, especially in San Francisco and Oakland, where many buildings are built in the 1970s and 80s. Here's how this plays out. You buy into a building with a reasonable HOA, maybe $500 to $600 a month. Then 6 months later, the HOA announces special assessment of $50,000 per unit to replace the roof, upgrade the elevator, or fix the plumbing. And you are on the hook whether you have the cash or not. Even worse, if you try to sell before the work is done, buyers will either demand a discount or walk away entirely. Lenders won't finance units in these buildings with active special assessments in many cases, which shrinks your buyer pool dramatically. And here's the resale risk. Buildings with a history of deferred maintenance and special assessments develop reputations. Future buyers know to avoid them, your equity gets trapped. Before you buy any condo, request at least 3 years of HOA financials. the most recent reserve study, the meeting minutes. If the HOA won't provide them, or if the reserves look thin, walk away. This is non-negotiable. Hey guys, it's Decent. As much as I love making these videos, there's one more thing I love even more, and that's helping families and people from all over the US and the world making the move to the San Francisco Bay Area. I've helped countless families making the move, so whether you're coming next week, next month, or even next year, don't hesitate to reach out. My contact information is right here on the screen and linked in the description in case you missed the on-screen pop-up. I look forward to helping you and your family making the move to San Francisco Bay Area. When affordability becomes a lifestyle tax. One of the biggest mistakes Bay Area buyers make is chasing affordability without understanding the commute trade-offs. And I'm not talking about a 45-minute drive. I'm talking about the suburbs where your only options is driving, and that drive is unpredictable, soul-crushing, and eat up hours of your life every week. According to the US Census Bureau, America Community Survey, the average Bay Area commute is over 30 minutes one way. But the average hides the reality that many people in outer suburbs like Tracy, Brentwood, Antioch, or Gilroy are commuting 90 minutes to 2 hours each way. Here's the financial trap. Buyers see the house in Tracy for $700,000 that will cost $1.5 million in Oakland or $2 million in San Francisco or the Peninsula. The price difference feels massive, but they don't calculate the real cost of that commute. And here's a lifestyle reality. The commute destroys your quality of life. You miss your kids' bedtime. You can't go to the gym. You eat dinner at 8:30 p.m. every night. And the weekends, you don't want to drive back into city for social events or activities because you're exhausted from the driving all week. The resale challenge is real too. As remote and hybrid work options expand, few buyers are willing to tolerate extreme commutes. The demand for these commute-dependent suburbs are softening, which means appreciation is slower and your buyer pool shrinks when you're ready to sell. If you are considering a commute-heavy suburb, do a test run during actual commute hours before you make the offer. Drive it both ways on a Tuesday morning and evening. See how it actually feels. Most people realize it's not worth it. When paradise comes with the uninsurable risk. The Bay Area has some of the most beautiful hillsides, forested neighborhoods in the country. Places like Oakland Hills, the Peninsula, the Santa Cruz Mountains, part of Moraine. Those areas offer privacy, nature, and a lifestyle that feels worlds away from the city. But here is the reality. Wildfire risk is not a theory anymore. It's real, and insurance companies are pricing that risk in the way that are fundamentally changing the economics of owning in these areas. According to the California Department of Insurance, major carriers like State Farm and Allstate have stopped writing new homeowners policy in high-risk fire zones, and the California FAIR Plan, which is the insurer of the last resort, is significantly more expensive and offers less coverage. Here's a financial trap. Buyers fall in love with the setting. They imagine the peaceful mornings, hiking trails, and the privacy. But they didn't factor in the insurance cost that doubles and triples in every few years. In some cases, homes are becoming efficiently uninsurable at any reasonable cost. Even if you can get it insured, the resale risk is significant. Future buyers are increasingly unwilling to take on the wildfire risk, especially as climate patterns make these events more frequent and severe. Your buyer pool shrinks, and the homes that do sell often sit on the market longer and sell for less than the comparable homes in the safer zones. If you are serious about property in a high-risk fire zone, get an insurance quote before you make the offer. Understand the actual cost. Factor it into your monthly budget, and make sure you're emotionally prepared for what living with the risk actually feels like. Alright, let's bring this all together. The house type to avoid in the Bay Area in 2026 aren't bad houses. They are houses that come with hidden costs, risks, and trade-offs that most buyers don't fully understand until it's too late. Victorian with foundational issues. Hillside homes with landslide risk. Charming fix-uppers with permit-heavy cities. Condos with deferred maintenance. Houses in commute-dependent suburbs with zero transit, and properties in wildfire-prone zones with rising insurance costs. Each of these can work for the right buyer with the right budget, timeline, and risk tolerance. But for most relocators and the first-time buyers, these house types are traps that look like opportunities. The smart move you can make in this market is to understand the full picture before you fall in love with any property. Know what you're buying, know what it will cost to own, and know what your exit option look like if life changes. The Bay Area rewards informed buyers. It punishes people who chase looks without understanding economics. If you are relocating to the Bay Area and try to figure out which house type actually fits your budget, lifestyle, and long-term goals, the smartest next step is to schedule a consultation with me and my team. We help people avoid exactly the mistakes we talked about today. We help you make strategic decisions in a market that's unforgiving if you get it wrong. Use the link below to book your strategy call. And don't forget to grab a free San Francisco Bay Area relocation guide. It breaks down neighborhoods, climate, and other relevant details for buyers. The link is below. If you are still trying to figure out whether the Bay Area is even the right move for you in 2026, you need to watch this next video. It's my full breakdown of whether the Bay Area housing market is worth it anymore, the hidden costs most people miss, and who should still move here versus who should look somewhere else. Click here to watch it now.